Hello and welcome to IFRS Talks, your source for all things IFRS. I'm your host, Anu Pandya. In today's episode, we'll be focusing on sustainability reporting and providing the latest developments from the International Sustainability Standards Board, the ISSB. Joining me today is Katie de Keyser, a director in PwC's Global Corporate Reporting Services team, specializing in sustainability reporting. Katie, thank you so much for joining me today on the podcast.
Thank you for having me, Anu.
Katie, I understand that the ISSB has been quite busy over the past few months on a number of different topics. So to start off the podcast, could you please give our listeners an overview of the areas that the ISSB has been working on?
Yeah, sure. So in 2024, the ISSB set out their work plan with the different projects that they intended to work on through to 2026. And one of those projects was around supporting the implementation of IFRS S1, which is the general requirements standard, and IFRS S2, the thematic standard on climate. Supporting the implementation of IFRS S1 and IFRS S2 is the ISSB's highest priority in their current work plan. And in light of this priority, the ISSB recently issued an exposure draft, so in April of this year, April 2025, and that exposure draft proposed amendments to the greenhouse gas emissions disclosures in IFRS S2. The ISSB also has a project in their work plan on enhancing the SASB standards. Now, for our listeners who might not be familiar with the SASB standards, these are a suite of industry-based sustainability reporting standards. Back in 2022, the Value Reporting Foundation, which previously had oversight of the SASB standards, merged with the IFRS Foundation. And as part of that merger, the ISSB assumed oversight responsibility for these SASB standards. So essentially, the SASB standards form part of the suite of standards that are currently overseen by the ISSB. And there are also two research projects in the work plan that the ISSB are focusing on. One of those research projects is on the topic of human capital, and the other is on the topic of biodiversity, ecosystems, and ecosystem services, known as BEES, the BEES topic.
Thanks for the overview, Katie. The ISSB standards have been issued fairly recently, so I paused when you mentioned that amendments are being proposed to IFRS S2. Could you please take us through the purpose of proposing amendments at this stage?
Yeah, of course. So maybe taking a step back, as I mentioned earlier, IFRS S2, that's the standard that focuses on climate-related risks and opportunities and has disclosure requirements in areas like transition plans, greenhouse gas emissions disclosures, and climate-related scenario analysis. As I mentioned when talking about some of the projects that the ISSB has been focusing on, the supporting implementation of IFRS S1 and IFRS S2 is a high priority project for the ISSB. And so as part of that project, one of the activities the ISSB undertook was establishing the Transition Implementation Group, or the TIG. And the purpose of the TIG is really to discuss implementation questions received from stakeholders, and then to go and inform the ISSB about those discussions on those questions. So the TIG essentially assists the ISSB in determining whether future action is warranted to address questions that are being raised by stakeholders. Now, coming back to your question about these IFRS S2 amendments. So since the issuance of IFRS S2, stakeholders have submitted a few different application questions to the TIG. And these questions focused on challenges that stakeholders had identified in applying certain specific provisions within IFRS S2 related to greenhouse gas emissions disclosures. And following the discussions on those questions by the TIG, the ISSB considered these questions and concluded that the application issues that were raised by the TIG warranted proposing amendments to IFRS S2 at this stage. So the ISSB issued an exposure draft, as I said, in April of this year, April 2025, with targeted amendments to IFRS S2 based on those specific issues that were raised to the TIG.
Good. Thanks, Katie. That background is helpful to set the scene. Well, let's get into it then. What are these proposed amendments to IFRS S2?
Sure. So as I said, these amendments they all relate to specific application challenges associated with greenhouse gas emissions or GHG emissions. The amendments are focused on providing guidance and additional reliefs related to existing requirements in S2, and there are 4 proposed amendments in this exposure draft. So taking them one at a time, the first amendment that we see in the exposure draft, it proposes to provide entities with a relief related specifically to Scope 3 Category 15 GHG emissions. So the proposed relief permits entities to measure and disclose Scope 3 Category 15 GHG emissions only related to financed emissions. So that would exclude emissions associated with derivatives and with other financial activities. The feedback that the ISSB received from stakeholders was that the current requirements in the standard in IFRS S2 could be perceived as confusing because IFRS S2 has a requirement to disclose Scope 3 greenhouse gas emissions. And there is also a separate requirement to disclose additional information about financed emissions for entities with activities related to asset management, banking, or insurance activities. So essentially, this proposed amendment would clarify that entities can choose to limit their Scope 3 Category 15 disclosures to financed emissions only, so making a direct connection between the additional information and their Category 15 emissions, and can exclude emissions arising from derivatives and other financial activities. As part of this proposed amendment, the ISSB is also proposing 2 additional disclosures. So an entity would be required to first disclose the amount of derivatives and other financial activities that they excluded from the measurement and disclosure of their Scope 3 Category 15 emissions. And secondly, explain what the entity treats as a derivative for the purposes of that disclosure.
Well, as a financial instruments enthusiast, the point on the derivatives was particularly interesting for me. Do the ICSB standards use the same definition for a derivative as financial reporting does?
So the proposed IFRS S2 amendments don't provide a definition of derivatives. In the absence of a definition, an entity would essentially need to apply judgment to determine what it treats as a derivative for the purposes of applying this proposed relief. So, for example, an entity might disclose that it had used the derivative definition from, say, IFRS 9. Now, it's worth noting that at the time at which we are recording this podcast, so late July 2025, the ISSB is starting its redeliberation on these proposed amendments based on the feedback the ISSB received during the public consultation period. And this proposed disclosure that I'm talking about right now, so a disclosure requiring information about the amount of derivatives and financial activities excluded from the Scope 3 Category 15 emissions, this is one of the areas that has been initially highlighted by the ISSB staff as a possible area for redeliberation. So we might see some changes to this disclosure going forward. We'll just need to wait and see how the redeliberations progress.
Okay, so we'll have to monitor the redeliberations to see where this ultimately lands. So thanks for that explanation, Katie. What were the other amendments that were proposed by the ISSB?
So as I mentioned, there were 4 areas of proposed amendments in this exposure draft. We talked about the first one, which was about financed emissions. The second amendment relates to the use of GICS. GICS is the Global Industry Classification Standard. Now, GICS is used currently in IFRS S2 in relation to disclosures about financed emissions. Currently, IFRS S2 requires entities that engage in commercial banking or insurance activities to use GICS, to use this classification system, to disaggregate their financed emissions by industry. Now, stakeholders identified challenges in using GICS to provide that disaggregated disclosure. And some of those challenges included the fact that GICS is not used consistently across jurisdictions around the world, and the fact that there are cost implications for preparers using GICS. Another challenge that stakeholders mentioned was that in certain jurisdictions, entities in commercial banking or insurance sectors are already required to use different classification systems locally. And so the requirement in IFRS S2 to use GICS might result in duplication of effort. So in response to these application challenges, the proposed amendment provides entities with a hierarchy of options for different classification systems that entities would use in their disclosure, depending on the entity's specific facts and circumstances. And as I mentioned when we were talking about the first amendment related to financed emissions, the ISSB is about to begin redeliberation on these proposed amendments. And this new proposed hierarchy of options is an area that the ISSB staff has initially highlighted as another possible area for redeliberation.
Okay, that sounds like quite a tricky area, but I guess it seems like the ISSB has taken on board stakeholder feedback on application challenges, and we'll have to just see where this ends up after the redeliberations. What were the other two proposed amendments?
Yeah, so the last two proposed amendments both relate to measurement of greenhouse gas emissions. So the third amendment, this is in relation to the use of the greenhouse gas corporate protocol itself for measuring greenhouse gas emissions. IFRS S2 currently requires entities to measure their greenhouse gas emissions in accordance with the GHG corporate protocol, but it includes a jurisdictional relief. That is, if a jurisdiction or an exchange on which an entity is listed requires an entity to use a different emissions measurement method other than the GHG protocol, then the entity is permitted to use that alternative method in its IFRS S2 reporting. The proposed amendment in this exposure draft clarifies the scope of this jurisdictional relief and states that the relief is available to an entity both in whole and in part. So what does that mean? Well, it means that if part of an entity, say, for example, a subsidiary of a group, in a scenario where the group is reporting on a consolidated basis, if that subsidiary is required by a jurisdiction or an exchange on which it's listed to use a measurement approach other than the GHG protocol, then that specific part of the group could use that alternative measurement approach in the IFRS S2 reporting for the group. And then the fourth and final amendment in this exposure draft is also a jurisdictional relief. This time it's a jurisdictional relief related to the use of global warming potential values, or GWP values. For our listeners who might not be familiar with these, GWP values are used in the direct measurement of greenhouse gas emissions. So IFRS S2 currently requires that when entities convert greenhouse gases into a CO2 equivalent value, they use GWP values from the latest Intergovernmental Panel on Climate Change, the IPCC, so the latest IPCC assessment. The proposed amendment extends the jurisdictional relief such that if an entity, either in whole or in part, is required by a jurisdiction or an exchange on which it's listed to use GWP values other than the GWP values required by IFRS S2, an entity is permitted to use those jurisdictional GWP values in its IFRS S2 reporting. So those are the four amendments that are in the exposure draft. As I mentioned earlier, the ISSB has a board meeting at the end of July where they will start to analyze the feedback received on this exposure draft. And we expect the ISSB will aim to complete that redeliberation process and have the amendments finalized by the end of 2025 or thereabouts.
All right, thanks, Katie. I mean, overall, listening to what these proposed amendments are about, it sounds like the ISSB is providing optional reliefs and further clarification to entities on the application of certain requirements to ease application challenges while still providing useful information. I think it will be interesting to see where the ISSB's redeliberations on these IFRS S2 amendments takes us. So that's all to say that I'm sure there's more to come on these proposed amendments. Okay, but if we move on then to other projects that the ISSB are currently working on, Katie, you mentioned a project to enhance the SASB standards. Can you please provide our listeners with some context on why the ISSB decided to include these enhancements in their project plan?
Sure, Anu. So taking a few steps back to provide some background on the SASB standards. For our listeners who might not be familiar with the SASB standards are industry-based sustainability reporting standards that cover 77 different industries. So there are 77 SASB standards, each one applicable to a different industry. The standards include disclosure topics, metrics, and technical protocols that are specific to each industry. And the SASB standards are designed to provide useful information to primary users about sustainability-related risks and opportunities. So that's what the SASB standards are. And I suppose our listeners might be wondering what the link is between the SASB standards and the ISSB standards themselves. So as I mentioned earlier, the ISSB has taken responsibility for overseeing the SASB standards. And as the ISSB was developing IFRS S1 and IFRS S2, they received public feedback that an industry-based approach to sustainability reporting is really important to the process of both identifying sustainability-related risks and opportunities and in facilitating a user's analysis of comparable sustainability disclosures within a particular sector or industry. And in light of that feedback, the ISSB decided to refer to the SASB standards, which, as I mentioned, are an industry-based set of sustainability standards, as a source of guidance in the ISSB standards. So to be clear, the ISSB standards don't require entities to apply the SASB standards, but the ISSB standards do require preparers to refer to and consider SASB disclosure topics when identifying sustainability-related risks and opportunities, and to refer to and consider the SASB when providing related disclosures.
Thanks, Katie. That's helpful background on the SASB standards and the incorporation of the SASB guidance into the ISSB standards. Now, listening to you, it really sounds like the ISSB is very much focused on industry-based guidance. Is that right?
Yeah, I would agree with that. I mean, as I said, the ISSB received a lot of feedback saying that this industry-based approach is really important for sustainability reporting. But it's also worth mentioning that the ISSB also received feedback that while an industry-based approach is very important, that some of the specifics within the SASB standards needed to be updated or enhanced. And one of the main themes coming through from that feedback was around the SASB standards needing to be more internationally applicable so that they could be applied more easily by companies across different jurisdictions globally. From the ISSB's perspective, high quality and globally applicable SASB standards are an important part of supporting the implementation of IFRS S1 and IFRS S2, which is why enhancing the SASB standards is a key project in the ISSB's work plan. And that has led to the issuance of an exposure draft with amendments to a set of SASB standards. And that exposure draft was issued earlier this month, so in July of 2025.
But Katie, you mentioned earlier that the SASB standards cover 77 industries. I mean, enhancements to 77 industry standards sounds like quite the task to me. Can you expand on the approach that the ISSB is taking for this enhancement project? And also, could you explain what the key aspects of this exposure draft you just mentioned are?
Yes, 77 standards is a lot of standards. So the ISSB is executing the SASB enhancement project in phases. So we're not talking about enhancing all 77 standards all at once. For this first phase, the ISSB has proposed amendments to an initial set of industry standards, which were included in the exposure draft published earlier this month. And the ISSB will be performing research into what the next phase of this overall project will look like. Now, the July 2025 exposure draft focuses on amendments to standards in 9 priority industries. 8 of those industries fall into the extractives and minerals processing sector. And the 9th industry is processed foods. So those are the 9 standards that are the subject of significant enhancements through this exposure draft. Now, the exposure draft also proposes targeted amendments to a further 41 SASB standards. So the exposure draft is proposing comprehensive amendments to 9 standards and then targeted amendments to a further 41. Now, these targeted amendments, they arise from the proposed amendments to the 9 priority industries. So the targeted amendments are really aligning the disclosures for the same disclosure topic across different industry standards. And there's 5 disclosure topics that are subject to these targeted amendments, and those are GHG emissions, energy management, water management, labor practices, and workforce health and safety. And these targeted amendments, they're really designed to ensure that these key disclosure areas are being updated in a timely manner, even in the non-priority industry standards.
All right, thanks for that, Katie. Well, now that we've unpacked the highlights of the exposure draft, I think it'll be good to understand the reasons behind the specific amendments. I noted on the IFRS Foundation's website that the ISSB also issued a basis for conclusions document that accompanies the exposure draft. Can you tell us a little bit more about this basis for conclusions document?
Yes, of course. So that basis of conclusions sets out the ISSB's approach to the types of amendments that they aimed to make to the priority industry standards. And they also discuss how the targeted amendments were identified. I find the basis of conclusions for this exposure draft really interesting because it brings a lot of insight into the amendments that are being made. And the basis identifies a few key areas that the ISSB focused on when proposing these amendments to the SASB standards. So first, the ISSB focused on improving consistency of the SASB standards with IFRS S1 and IFRS S2. Now, the ISSB has an intention here that the SASB standards are to be used alongside the ISSB standards. And so part of the process for improving consistency was to limit repetition of disclosures across the 2 sets of standards. And you can see in the amendments that there are amendments where the ISSB has achieved this consistency by replacing certain technical protocols in the SASB standards with cross-references to relevant parts of the ISSB standards themselves. The next focus area for enhancements was to improve interoperability of the SASB standards with other sustainability-related standards and frameworks. In particular, improving interoperability and alignment with the GRI standards and with the TNFD. So the ISSB considered disclosure topics and technical protocols which could be enhanced to align with the GRI and TNFD. And the basis for conclusions actually has a couple of appendices with tables that set out the different metrics that the ISSB identified as being areas where interoperability and alignment could be improved. The ISSB also explained in the basis that it was engaging with EFRAG with respect to interoperability considerations with the European Sustainability Reporting Standards throughout the SASB enhancement process. The third area the ISSB considered for developing SASB enhancements was informed by the research undertaken to date by the ISSB on the human capital and Bs research projects that I mentioned earlier. So the 9 priority standards that were selected for this first phase of enhancement, they all include disclosure topics related to either human capital or Bs, which means that some of the research work that has already been done on those topics could be used to inform the SASB enhancements. And finally, as I mentioned earlier, one of the stated goals of the enhancements was to improve the international applicability of the SASB standards.
That's helpful, Katie. I think it gives our listeners a really good picture of the thinking behind the proposed amendments to the SASB standards. I also understand that IFRS S2 has industry-based guidance. Will the proposed amendments to the SASB standards impact the existing IFRS S2 industry-based guidance?
Yeah, that's a good question. So the industry-based guidance on implementing IFRS S2 is derived from the SASB standards, and it provides guidance on climate-related content for 68 industries. And that guidance in IFRS S2 is largely unchanged from the requirements in the SASB standards. It's essentially the climate content from the SASB standards. So the ISSB issued a separate exposure draft in July 2025. So we actually have 2 exposure drafts. This second exposure draft asks whether the amendments that are being proposed to the SASB standards should be replicated in the relevant portions of the IFRS S2 industry-based guidance, essentially to ensure that the SASB standards and the IFRS S2 industry-based guidance remain aligned on these areas.
Okay, that's interesting. Okay, so we'll have to wait to see what the comments, are from stakeholders on these enhancements. And I believe that ends, the comment period ends on 30 November 2025. On a separate note, Katie, I heard that there's been some educational material that's been published recently by the ISSB, including guidance on GHG emissions reporting. Could you give our listeners the highlights of what's covered in this educational material?
Yeah, sure, Anu. So the reporting of GHG emissions has been a really popular topic for the ISSB in 2025. The educational material that the ISSB issued recently on GHG emissions was developed to help preparers understand and apply the current measurement and disclosure requirements in IFRS S2 in relation to greenhouse gas emissions. And maybe a useful reminder for our listeners, educational material that is published by the ISSB, like this educational material on greenhouse gas emissions, is non-authoritative guidance. This essentially means that this educational material, it doesn't override or change requirements in the ISSB standards, but it might be helpful to preparers in providing context for the standards and illustrating how to apply specific requirements. Now, this greenhouse gas educational material is written as a series of questions and answers. So questions that people might have in relation to the IFRS S2 requirements, and then the answers from the ISSB. Some of the aspects covered by this educational material include questions on the disclosure of emissions targets, the application of the Scope 3 greenhouse gas emissions measurement framework, and how an entity could apply that measurement framework and related disclosure considerations.
Does the guidance in the educational material link to the exposure draft on proposed amendments to IFRS S2 that you spoke about earlier?
That's a good question. So this educational material is designed to assist entities in applying IFRS S2 as it exists currently. So no, it doesn't directly address the proposed amendments that we discussed earlier in the podcast.
Okay, thanks, Katie. So I think that covers the latest insights on GHG emissions. But has the ISSB published any other educational material that our listeners need to know about?
Yes, and indeed they have. So the ISSB has published quite a few pieces of educational material recently. One that I might just want to mention for our listeners, also in relation to the topic of climate, the ISSB recently issued guidance about disclosing information with respect to an entity's climate-related transition. So information about an entity's transition plans. And now this educational material is designed to help entities that already have a strategic climate goal or a formal climate transition plan, to help those entities develop disclosures about their plans in accordance with IFRS S2. There are specific disclosure requirements in IFRS S2 that would be relevant for entities that have a transition plan. And so the educational material guides readers on how to disclose this information. Again, like with the greenhouse gas emissions educational material, this material doesn't add to or change the requirements in the ISSB standards, but it does include illustrative examples that might be helpful to preparers. And I would also say that this guidance document could be used by entities with a transition plan to improve existing disclosures, even prepared under other sustainability reporting frameworks. So it's quite a useful piece of guidance.
Perfect. That makes sense. Well, Katie, I think that covers all we wanted to discuss on today's episode. So thank you so much for joining me today. And thank you for all of your insights on the latest developments at the ISSB. I think we'll keep a lookout on those redeliberations, and I'm sure we'll need to have you back on the podcast if there are any more developments in this area. Thank you to our listeners for tuning in. In-briefs on the exposure drafts and educational material that we discussed today are available on PwC's Viewpoint platform. To never miss an episode, remember to subscribe wherever you get your podcasts. And until next time, happy accounting and reporting.
This podcast has been brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitution for consultation with professional advisors.